And it looks like we are now streaming on Facebook. So hello, everybody. Lisa McInnes Mortgages. I have Elena Russell with Home Equity Bank, which is one of our reverse mortgage lenders. She's going to give us a little bit of information and educate us on what reverse mortgages are. First off, I'm going to do my typical disclaimers. If the dogs bark, I apologize. They bark when a squirrel walks by. So it just happens. And I also want to say happy Thanksgiving to my friends and family in the States. Hope you have lots of turkey and enjoy your day. And yeah, so Elena, thank you so much for agreeing to come on and talk to me and to the audience about reverse mortgages. I know there's a lot of misinformation out there, and I just want to get it out there what it can actually, what type of clients they're perfect for. So I'm going to let you take it away and educate us a little bit. I'm excited for this, and I'm going to try and watch the live feed. I'm still learning this part. So if there's any questions, if anybody has any questions, feel free to ask on the chat. On Facebook, and if I don't answer them live, I'll get back to you and definitely answer. So feel free to ask any questions that may come your way.
Absolutely. So, thanks, Lisa. Thanks for having me. No pressure, right? Live.
Yeah, no pressure.
Don't stutter. Don't do anything silly. Don't look dumb. So yeah, thanks again for having me over. It's been amazing to be able to connect in person and to be able to connect online. Everything is Zoom right now these days and Facebook Live. It's a great opportunity to talk to people. Like you said, there's a lot of misinformation, fortunately, about reverse mortgages. And I want to kind of just go back a little bit and say, so my name is Elena Russell. I'm a business development manager with Home Equity Bank. We've been in business for over 35 years. So we're the only bank dedicated strictly to reverse mortgages. We provide solutions for clients who are 55 plus, mature Canadians. We don't like to call them seniors because nobody likes to be called a senior, no matter what age they are, right? So that's something we learned. So Canadians do not want to be called seniors. They're smart, they're educated, they're savvy, especially now. We have to be online if we want to see our loved ones, we want to see our family members. So that's what we've learned. So a lot of clients, when they hear the word reverse mortgage, they hear something about the United States. And unfortunately, the stigma comes from the US. So Canadian reverse mortgages are completely different from the United States. So the biggest difference is that in US, they actually take over your title. And then if the property value depreciates a little bit more than the mortgage plus the interest on title, the banks are actually allowed to foreclose. And that's where the negative, the bad stigma comes from. In Canada, it's completely different. We're a federally regulated bank. We're Schedule 1 bank, just like all the 5 major financial institutions, TD, Royal Scotia, all of the other banks. Again, we're regulated by OFC, the same as all the major financial institutions. So all of the rules, regulations, compliance, everything is exactly the same. We've been providing services, and you probably heard CHIP. So CHIP is us, basically Home Equity Bank. CHIP stands for Canadian Home Income Plan. And in a nutshell, what the reverse mortgage is the mortgage which is registered on title. We're first charge on title. We will not take over your title. You maintain ownership of your home. And we will lend the maximum up to 55% loan to value of your existing residence or the property you're thinking of buying. And the reason we do this, we lend conservatively to begin with, is because we do not want to take over anybody's house. We're not in the business of owning homes. We want clients to have comfortable retirement, enjoy retirement on their terms, travel when we're allowed to again, help their loved ones, go through financial difficulties, maybe assist the kids with educations, all of those different scenarios. And I will touch a little bit more into it. Who is the perfect clients and what is the perfect solution? But the biggest misconception, again, is we will take over the house. We do not. You maintain the ownership of the home. And a lot of clients are just kind of can't wrap their head around of, okay, I don't need to make any payments because there are no payments required in the reverse mortgage. What if I'm going to be destitute in my old age and you guys will own my home? The idea is we lend very conservatively, sliding scale at the age 55, which is a minimum qualifying age for a reverse mortgage. We usually lend anywhere between 25 to 30% of value of your home. And closer to the age 75, 80, that's when you'll get maximum of that 55% loan to value. We're the only lender who has a no negative equity guarantee, which means if your house value depreciates over a period of time that you have the reverse mortgage and you do not make any interest payments and it continues to accumulate on the property title, we will not foreclose. So let's say if you sold your house and your value of your property is less than the mortgage plus the interest, the bank will not go after the difference. So that's a big, huge savings grace and a big misinformation for the clients. So it's a big, just they really put their mind at ease, because what if I want to leave something for the kids? I want to be destitute. I don't want to be a burden on somebody else. And that's usually between 10 to 15 years, the mortgage, that's kind of the term of the mortgage. They usually people maintain their reverse mortgage. And then the next 10 to 15 to 20 years, they usually either move to the smaller residence or they'll downsize or they go into the senior's home, or if they move in with the kids, or unfortunately they pass away. So 99% of our clients have a lot of equity remaining in their home, even if they haven't paid 1 penny of interest.
Okay, that's exactly, people are worried when they hear reverse mortgage. That's exactly what it is. Oh, well, they're going to own my home. And you're not in the business of buying houses, of getting houses, right? You don't want to have to go and sell a home after you've foreclosed on somebody. That's not profitable for anybody. So that's not what you're in it for. That's not what the company is in it for. It's really trying to provide a solution that kind of thinking outside the box for those clients. And that's why I'm really starting to enjoy learning about this product a little more and all the ins and outs. And I'm thanking you for teaching me a little bit more about it. I'm really enjoying it. So
absolutely. Thank you very much. So just quickly want to mention one of the biggest differences we find, my brokers tell me, it's one of the easiest mortgages you probably ever do. As you know, if you've been working with a lot of clients or your clients are trying to qualify for mortgages, the rules the banks are tightening. Doesn't matter if it's an A lender or a private lender or a B lender. You have to provide so much information, so many documents, and there's still no guarantee that you'll be approved. With the reverse mortgage, as long as it's your own primary residence, as long as you make your property tax payments and insurance or condo fees, 99% of the time you qualify. Those exceptions, if the clients are outside of the country, they have no income, we still work with those clients just to find them a solution. And it kind of takes us to the next question. Who is it the right product for? A lot of, again, misconceptions are it's probably for the products for the older, kind of a really cash poor clients who have a lot of issues with their cash flow solutions. And we find there's usually 4 types of clients who can benefit from this reverse mortgages. The best way to think about the reverse mortgage is like a home line with no payments, or a lot of people have been deferring their mortgages in the last 6 months, 9 months. Basically, if you deferred your mortgage for 6 months, well, CHIP is the ultimate mortgage deferral. So if you deferred it for 6 months, we allow our clients to defer their mortgages indefinitely. And that's really the easiest way to think about it. So the first 2 types of clients are the need clients. The clients who are struggling financially, they've been let go of work, they maybe can't afford to make their mortgage payments, they accumulate a lot of high interest rate debt. What we'll do is we'll pay out their existing mortgage. We'll assist them with paying out their credit card debts or any high interest rate debt, and then which allows them to have a cash flow to afford the retirement and maybe stay in their home and don't have to worry so much about the cash flow and mortgage payments, and have 2-3 small jobs just to afford the mortgage payments. The other types of clients are the need clients. Again, if they have the loved ones or require medical attention, right? They can't really afford to put them in a nursing home or a senior's home, which can be quite expensive. But we usually in this kind of situation, we have professional nursing care will come and take care of their loved ones while the other spouse or the kids allowed to maybe go to work and make the living, right? So this way, people don't have to worry about being the nurse for their husband or their wife. They don't have the qualification, and there's a huge stress and burden on the entire family. This way, they can stay in their loved home they love, and they've accumulated so many memories. Take maybe some equity and retrofit their home, put maybe ramps or make it more accessible. And again, stay in the home you love, or maybe move into something more suitable. Those are the kind of the need clients. And then there's the want clients. The clients who are 55, the kids are out of the house. They say, you know what, I want to start enjoying my retirement. Again, travel, not so much right now, but maybe they want to buy a vacation property. Maybe they want to go buy a lake lot. Maybe you want to start and buy an RVs and then travel and then do some camping. Those are the want clients, the ones who find a lot of kids say, Mom, Dad, enjoy your retirement. I don't need your house, because it's, again, as a big stigma is the house is for the kids. This house is an inheritance. It's untouchable. And then people feel guilty taking an equity out of their home. It's one of the biggest investments you will ever have, but people are really reluctant to tap into some of the equity in their home, which is tax-free. But they don't mind depleting their RSPs and their tax-free savings account, which potentially can affect their old age security. So again, it's a taboo, which we need to dispel that myth. It's your house, it's your equity. It's just like the money you build up in your RSPs and your pensions. Take advantage of it. Talk to your financial accountant, financial advisor, and do the proper strategy so you don't have to deplete your investable assets. And again, the last types of clients are the high value clients. They're enjoying a certain lifestyle. They always go to Florida. They always go to Phoenix, Palm Springs, all those places. They can't quite go, but maybe they have a vacation home and they have to maintain it. They can't sell it right now. They don't want to sell it right now. So they may be hiring a management company to take care of their vacation rental property. So anybody who from a clients who really need cash flow solutions to somebody who's quite wealthy, but just doesn't want to have any payments.
Perfect.
Those are the usual clients.
You had, no, and it just left my mind there for a second. I was going to go tax-free. So you had touched on that, it's taking the equity is tax-free. It's not going to interfere with your old age security or any of your other issues where you have to be careful to withdraw from your investments, because if you withdraw too much, then that's going to increase your tax bracket. Accessing the equity with a reverse mortgage, that doesn't even come into play. You don't have to worry about that whatsoever. So that's really a key point, I think, when people are thinking, do I want to take my investments out right now because maybe they're down a little bit? Like I'm gonna be the first person to admit I don't watch my investments because I don't like that very much. I leave that for my husband and the investment planner. I let them take care of that. But maybe your investments are down right now and you don't want to take them out because you'll be taking a loss. So it's really important to think about everything and to have an educated plan in place, not just well, let's do this. I really preach to all my clients to be educated in every decision that they make, and I want them to understand every step of the way. So that, I think, is a really big point right there.
Absolutely, yes, I agree with you. So don't leave anything to a chance. Know all your options. And maybe a reverse mortgage is not a right solution for you. That's where Lisa will advise you an unbiased decision. Is a mortgage right solution? Is a home line is the right solution for you? Another quick little point to your information with Lisa about the tax-free. You do not have to take the entire balance you're eligible for on a reverse mortgage. The minimum to advance the reverse mortgage is $25,000. What our clients are doing, they will advance the $25,000, maybe do some minor renovations to their house, and they have the rest of the funds available to them to tap into it as they need it. There's no payments. You don't have to be charged on anything you do not use. It's just a contingency fund that you can tap into it if you need it. All the fees of appraisal and setup and legal fees all comes out from mortgage proceeds. So again, there's no out-of-pocket expenses for clients. And if you do want to make payments, you can make payments towards the principal, and you can make interest payments either monthly or you can pay it once a year. So your balance will never exceed. It will never be accumulating interest on the top of the balance you advance. So we have a lot of options for clients. You can do it either monthly withdrawals, like an annuity or pension. Again, it does not affect your old age security or CPP, or if you potentially on age product. Those are the clients who really worry about losing about their government benefits, right?
Yeah.
Please talk to Lisa. We'll advise you with we're a federally licensed bank. So if you're outside of Alberta, we're a federally licensed bank. We're able to help you and your loved ones. If you have clients in BC, Saskatchewan, Toronto, anywhere, we're able to help you anywhere in Canada.
That's fabulous. And while you were talking, another situation where this might be a good product came to mind too. You know, there's times where you're in your home and you don't want to move, but you now have mobility issues. So you need to do renovations to those homes to help with the mobility, whether it's you need to change your bathtub to a shower or whatever it is, right? So again, this gives you the options to access those funds and to make those changes that you need to make to stay in your home where you are comfortable and happy. So there's so many different ways we can assist with the reverse mortgage.
And just, yeah, the really good point. Another quick point is you can use reverse mortgage for a purchase. So if you're thinking of purchasing a house, but you're not quite sure if you want to sell your existing residence, we can blanket. Basically, it's a kind of financial term, but you can keep your existing residence and you can buy your new place, is taking an equity out of your existing residence and buy a new place without being forced to move or find the tenants or anything like that. Be able to keep both properties and increase your wealth. Right? So if there's the market is a little bit up right now, you want to sell it. If you don't want to sell it, you want to rent it out, opportunity for you to leave something for your children and increase your wealth over time.
Fabulous. Yeah, there's so many different options. It's really a flexible product, and
Absolutely.
I'm happy to be able to provide it to my clients that need it. Do you have anything else that you think, you know, my audience would be interested in hearing or should hear, or maybe they think it's one way, but it's another? Or do you think we've covered it all?
Just the things, if you're a client who's 55 years old, that you may be worried about your job situation, because we found a lot of 55-year-olds right now are in the situations they might be let go. It's a fact of life, right? Because they have a tenure, they have a seniority, they have the pensions, and the companies have to be very prudent in these times, right? So if you're really worried about your potential situations with your work, please reach out to Lisa. We'll be more than happy to work with this financial strategies for you, just to see if you can maybe have a bridge between the age 55 and 60 when you are planning your retirement. Those are the great solutions. If you have you're assisting your kids right now, let's say if your kids lost their job and you're helping with the grandkids and the kids and the loved ones, or you're helping your kids buy a house, again, reach out to Lisa. We'll find the best solution for you to assist your loved ones. Unfortunately, a lot of clients are going through divorce right now and a separation. The courts are backed up until 2023. Again, we have options for spousal buyouts. And most of the time, if the client's down to one income, they might not qualify for home equity credit lines or additional refinances. So again, reach out to Lisa. We'll be more than happy to discuss your options. Send your friends, send your family members. If you have any questions whatsoever, there's no such thing as a silly question. We'll be more than happy to discuss it with you.
Perfect. Well, thank you so much, Elena. I really appreciate you taking the time out of your busy schedule. I know you're trying to cram a bunch of different appointments in now that we're having a little bit of restrictions put on us here tomorrow. So I do really appreciate your time. I appreciate your support, and I appreciate your partnership within the mortgage industry. It's really great to have somebody on the lender side that's as supportive of brokers and clients as you are. So thank you from the broker world.
Oh, thank you so much, Lisa. It's a pleasure working with you guys, and absolutely anytime, please reach out to us. Lisa will have my contact information if you have any questions specifically to me as a lender. But if we do not know the answer, we'll find it.
Exactly. I'm good at that one. So everybody on Facebook, thank you for taking the time to watch. This will be uploaded to Instagram as well and to YouTube. And thanks again.